It's a 1-2 punch really for it, Dom. I mean, the things that the stock market is worried about, it's a concern to the oil market. The global demand story, the trade war story, all of these things go to a hit on oil demand, as Jackie was just pointing out. The rub, though, the other way is that Russia and Saudi Arabia put oil on the market ahead of the Iran sanctions on November 1st, thinking that there was going to be a clampdown in Iran and that we were going to lose upwards of 1 million to 1.5 million barrels of Iranian oil per day. Then the Trump administration comes out, issues waivers really to all of Iran's buyers, causing us to lose practically no Iranian oil. And now we have the Iranian oil still on the market, the extra Russian oil, the extra Saudi oil, and who's in the mix too? United States, with almost 12 million barrels a day of production.
So how long is it going to take to work off this particular latest glut in the oil market? Is there a sense that there's a balance coming? We say this, of course, again, just ahead of an OPEC meeting coming up in a few weeks.
The Saudis are trying to muster a response to this. They're trying to maneuver into a 1.4 million barrel per day cut. So far, no support from the Russians, but this latest sell-off may get them there. The other part of this is that the winter season that we're going into right now, that's the peak demand season for the Northern Hemisphere, for the world. So they get some help from that, or they should. But they got a tough road to hoe now, and the Saudis are going to have to shoulder the burden once again after doing so much hard work to try to get this market more balanced and higher in price.
For a while, we've been seeing the unwind of the long Brent short nat gas trade, which caused nat gas to pop on short covering and oil to come down. Where are we in that? And how are traders positioned at this point? Are we going to be hearing about hedge funds blowing up, getting the margin calls in this quarter?
No doubt about the blow-ups. We've already had one notable retail sort of blow-up, a company that's exclusively sold options, mostly on natural gas. Folks are left with debits in their account. I always remind everybody, if you're trading commodities, know one thing: you can lose more than all of your money. Yeah. Okay, so you need to be careful with that. But beyond that, yes, there's definitely some forced liquidations going on right now. We'll have to see the price point we hit today, the low, that 52.77. Heavy volume. We have a nice jump back from it. Given that, there could be a blow-off bottom there. We'll have to see how the chart looks tomorrow and the next couple of days. But so there's a chance for that. But for sure, what happened in the beginning of October, this market was all bulled up. All the Wall Street analysts were saying $100 a barrel oil, tight supply, strong economy, $100 by the end of the year. And here we are. This is what happens. And now there's a massive sell-off. We're probably seeing the pendulum swing back the other way.
When you believe the bull, you got a problem, right?
If you over-believe the bull. I always say believe in yourself, not just too much.
So let's talk about gasoline. It's down like 30 cents a gallon. How long is that going to last?
It's going to last through Christmas, through the end of the year, absolutely. And there's a lot more to come. I mean, here in New Jersey, you can get gas for about $2.50 a gallon now.
Yeah, $2.49. I saw it the other night.
Right?
Yeah.
And so you're talking about another maybe 10 to 15 cents a gallon lower here in New Jersey. You could see $2.35, $2.25. Certainly down south, South Carolina, the traditional low-tax states, those consumers could be seeing below $2 a gallon. So all the worries I know that consumers are having right now about the stock market, they are going to feel a lot better when they pull up at the pump. So that might help the retailers in the holiday shopping season.